Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is November 14th, and this is episode number 497 of Rocket Fuel. And today's episode, we're going to cover the Rocket Pool team at Devcon. We're going to be talking about the RPL price hitting new cycle lows. We're going to be talking about Invis's Dune dashboard and how that's had an update. So that's really exciting. And we're going to be talking about a whole lot more, including the ETFs and more. So let's get started.
10, 9, ignition sequence start, 6.
So we're going to start here with this post from Jonathan Mayer, who says the Rocket Pool workshop happening right now at the Node Operators Community Hub at Devcon. This hub is by Ethereum on ARM, DAppNode, and ETH Staker, and the talk is anyone can be a node operator. So this is a version of a talk that the community has given a whole bunch of times before, and we've had Ken gave this talk in ETH Denver, and I've seen it being delivered at a bunch of other places as well. The community's got it down really nicely. As far as I remember, it talks about hardware requirements and making choices about hardware, and it talks about installing Linux, installing the smart node stack, and all of that good stuff, and depositing into your validator, and also spinning up validators. As far as I remember, it does it on testnet just to show you what it looks like. I think there might be some snags along the way because of Haleshki basically, but the idea is that it gets people caught up. It tells them what Rocket Pool is, why it's good to be a Rocket Pool node operator, and all of that amazing stuff. So this is actually like a really nice talk, and it looks like there were about 7 or 8 people in attendance, so that of course is lovely to see as well. Maybe a couple of them will be orange pilled. Now again, in the same space, here Mav then took over and was talking about Saturn roadmap and the different changes that are going to happen with Rocket Pool going into Saturn. And by this time, I think another couple of people had already joined as well. So it looks like the time in Thailand is going really well, and from what I'm understanding, Devcon has been a huge success. People are really enjoying the vibes, the community sentiment. The quality of the talks has been excellent from what I understand as well. And it's just really, really cool to see. On top of that, we had Meek sharing a story saying, I may have converted a Lido staker to run a Rocket Pool node. And people were joking, like, was it a testant? They got bought out by Bitwise. It says that I meant a guy holding STETH. So then said, were they Justin's son? And said yes. But no, this is actually really great that our community kind of being evangelical, hopefully in the right ways, and encouraging people to join Rocket Pool, which is great. Like, we need node operators. We need a whole lot of RETH to be deposited, please and thank you. But overall, it seems like there's some really cool people from the community who are there who I haven't met. And it's a shame that, I wasn't able to go to Devcon this year, but maybe next year, if things go well, I might attend. But Meek, Blue AVM, a whole bunch of other community members who I haven't met before were there, who are there. So maybe next time, they'll attend and our paths will overlap then. Okay, let's move on to some depressing news, and this is about the RPL price action. Now, the RPL price action has been bad, to say the least. It's just like the sentiment in the community has just been absolute trash. People are just talking about everything in the most dispiriting, like, sad terms. And the thing is, this isn't because that RPL is like crashing or anything. This is, well, partly that, but partly because BTC is just going up. You're seeing meme coins like Peanut going up to $2 billion. You're seeing like just absolute like trash tokens like rocketing up in valuations, and then you have solid projects, things like Lido, like the LDO token. They might be able to say that it's not the token doesn't accrue any value or anything like that, but like things like that, things like the RPL, of course, we'd already mentioned that, but these are the ones that are getting a lot of they're getting hurt basically in their ratios, and there's some really like depressing statistics going around recently. One of them was that during Atlas peak, 400 RPL would buy you one Bitcoin. Now you need 10,000 RPL to buy one Bitcoin. So that was absolutely horrific to hear. On top of that, it was that case that 10,000 RPL would get you one solo validator. Now it obviously doesn't do that anymore. So there's a lot of negativity. So here the price from yesterday hit a low, and then again this morning hit another low, and then again later this morning hit another low. And the current low now is 0.003180477. That's the RPL to ETH ratio. Thankfully, we haven't hit a new low on the dollar, but the ETH ratio is taking a huge hit. Now, on the market, the RPL price is kind of holding on to that $10 spot. It has gone under it earlier today. It went down to $9.77, but for the most part it's kind of trying to hold on to this $10 range. Now other tokens are down worse than RPL, if that's any solace to people. I know it's not really any solace to people, but tokens like ZK Sync, I hold that. Eigenlayer has been doing really badly these last few days. So other tokens, like I said, LDO is not performing well. So I'm not saying that this is okay, right? Like it's hard to hold RPL in this time, and I know that almost all of you who are listening to this are RPL holders, but yeah, it's tough. And we actually talked about this on Weekly Orbit today. Pat and I talked about it for quite a while when we were recording it earlier, and you'll be able to see that tomorrow, about where we are in the market cycle and how things look really, really bad for alts, basically, as Bitcoin moves up and some select alts move up. And then if this is a bull market like we hope it will be, when tokens catch up, they melt faces. And now here, Ben Cowan, who I have a very love-hate relationship with, has been talking about this for quite a long time. And he says, I feel like I've read this story before. The process of alts bleeding to BTC should be over in about 2 months. This is my posts over the last 3 years were not just me being a toxic maxi, it was just me telling you that this is what always happens until post halving. So here he's got a whole lot of tokens and showing their relationship to BTC, and there's ETH BTC down 5%, Link down 6.5%, Theta down 7.5%, DOT down 7.5%, Litecoin down 5.5%, Sol down 2%, ADA down 3%, Uni down 8%, BNB down 4.5%, Aave down 6.5%, AVAX down 6%, Maker down 5%. So all of these alts are just getting absolutely slaughtered by Bitcoin, and they're losing value in Satoshis. But they're also getting hit hard overall. And I think the thing that is causing such negative sentiment is that, like I said, the tokens like Peanut and Pepe and Doge and all of these have rallied really strongly, like the meme tokens, and people I think are just like, wait, my token has utility. Why is this meme getting pumped when my token does stuff, right? And I think that sentiment as a whole is just really pervasive right now and just really, really negative. We talked about this on Rocket Fuel yesterday as well, about January, the first week of January in 2021, and how ETH basically came back with a vengeance, and how other tokens that had been left behind in the ETH ecosystem kind of did well in that period as well. But I think that we're kind of lining up to something similar to that. I've been saying that for a while, but it seems like Ben Cowan seems to think there's something similar to that. All I know that if you're in BTC right now, you might think that it's going to be going up forever, and it just might. But maybe it's time to think about taking some of those profits and putting them into alts. I'm not telling you to buy RPL or anything like that, but I think that's maybe one way that you can maximize your gains into the coming year. Is definitely an interesting thought. And here Ben Coin also had the chart that kind of like his thesis basically. So for those of you who are listening and not watching, there's the alt total 3 minus USD. So this is all the tokens except Bitcoin, ETH, and USD. USDT, and so it's all the other tokens in crypto minus those three against Bitcoin. And what we say here is that there's a line basically that he's drawn at around I think it's 25% dominance or something along those that kind of area, and what it shows is that there's a line, and that line has been tagged a few times, and it kind of, whenever it tags it, it kind of bounces off it, except right at the end of 2020, which is the period that, if you're following the 4-year cycle, that's the period that we kind of analogous to right now. So what he thinks is that, we've got on the drop coming into going to that line, and then there'll be a bounce basically where alts like significantly outperform BTC in 2025 from that point. So, there's negative sentiment, there's a lot of negativity around, but like the markets are potentially showing, historically, that there's a path out of this. Now, this is technical analysis, it's not worth the paper it's printed on. It's it's astrology for crypto bros. Pateris, if you're watching it, a shout out to you. But that this isn't just something that like I'm saying that I've seen. It looks like other people have similar ideas of market cycles and what they kind of look like. Who's to know if that's going to repeat? It might be that the total 3 just collapses to 0 and Bitcoin goes to 100% dominance, but that doesn't seem likely either, of course. But that's kind of where we are right now. Like, sentiment is absolutely horrible. People are saying things in the Rocket Pool community about RPL being dead, about ETH being dead, and I'm just like, what on earth are you guys talking about? Like, are you guys like following the same news I am? Are you guys listening to the same stuff I am? Because literally, like, what's going on here? And I'm going to talk about that at the end of the episode. But before that, we've got some more Rocket Pool news to cover. And yeah, here we have an update on the Dune charts that we used a few weeks ago, but like I was kind of noticing that the numbers weren't quite making sense to me, and we kind of figured out the reason why. So Invis has a Dune chart that I'm going to show you guys in a couple of minutes, and on that Dune chart, it shows you the percentage of node operator ETH in the protocol, and also the flows basically into the protocol and out of the protocol in terms of node operator ETH. Now, that dashboard actually got data from another dashboard that was run by Dr. Worm, and Dr. Worm's dashboard broke with the Houston upgrade. So Noshua here, I'm not sure who realized this, but it seems like it was only realized in the last few days. So Noshua here said that the nETH one uses Dr. Worm for mini pools, and that hasn't tracked a new mini pool since June when the Houston happened. So with that realization, then Dr. Worm here was like made aware, and he was like, I'm gonna fix it, and then started like taking actions to fix his Rocket Pool dashboard. And this is the Rocket Pool dashboard right here on the screen, and it's called Dr. Worm's Rocket Pool dashboard. It says shout out to different people for their contributions and queries, and it tracks things like validators, liquid staking token, a whole lot of these things. So this is actually a really wonderful dashboard that you can go and have a look at, and it's got some really good information there. But the key piece of information that we were wanting to have a look at was the node operator, the mini pool count and node operator ETH. Well, after Dr. Worm updated his dashboard, Invis's dashboard also updated. Now, this may sound like a little bit of cope to you all, and I'm just going to try to be like straight up, but right here on the left chart, you can see that there's a tiny uptake. There's a tiny uptake in node operator ETH. And, we can have Rocket Pool grow without having node operator ETH come online by having existing node operators become more efficient. On the other side, the right side, this is actually like a little bit clearer. You can see that for the first time since January of 2024, we have had a positive flow week in Rocket Pool. And as you can see this here, where we had 10,000 ETH come into the protocol that wasn't there before. Now, on the left chart, let me actually show you from this side, like that little increase might not seem like much, but when you have a look at the 8 ETH validators, well, sorry, this is just 16 ETH validators. You can see how that number's come down so much. But if you have like just the 8 ETH validators here, you can see more clearly that like on, October, there was 13,000 of them. and now we are up to 14,300. So we've added nearly 1,000 8ETH validators, and more than 1,000, like 1,300 basically 8ETH validators, which is absolutely wonderful. And this just shows you in the middle, that peak is the Atlas upgrade, when a lot of our node operators switched from 16ETH down to 8ETH, and that's been going down ever since. But then there's a sharp drop off over the last couple of weeks, where we had 78, I'm not sure what that number is, 78,000 node operator ETH that has now gone down to 67,000 node operator ETH in 16ETH validators. I think that's what it's showing. But that is actually really, really cool to see. That, I wasn't just imagining it when I was saying that these numbers don't make sense to me and something's not right. It seems that, they've been updated now, and that uptick, like I said, is the first time that we've had an uptick in basically 10 months. So that is, 11 months. 10 months, sorry, 10 months. So that is really great to see. I really hope that, we can keep that going. However, it seems like this week will be a down week because of those exiting validators. The ones I was talking about, the 370 validators who exited a couple of days ago. At least the benefit of that is they're going to bring us back to peg. So that's good. Okay, and then from there, we can see that other tokens are trying to differentiate themselves from staking. Like, so EtherFi is now actually staking with Bitcoin, which I don't know how that works or what that is, but they have an eBTC token, which is staked Bitcoin token. And EtherFi, of course, are one of the big node operators on Ethereum now, and they're actually staking Bitcoin now with eBTC, and they are giving some really incredible tokens for this, like their points, and it's basically like up to 4,000% yield. So it's I think this is one of those things that we're gonna have to keep an eye on about EtherFi, because Val here was talking about how Rocket Pool has actually held up quite well compared to other tokens. And let me just find that. Yeah, so here's Val talking about how Rocket Pool market share kind of peaked at just over 3%, which was in summer of 2023. That was as those Atlas validators came online. And now we are kind of back to the 2% market share. What's interesting is, he says, we've done better at holding our share than Puffer, Kelp, Swell, Renzo, and Frax. Stader, Mantle, Lido, EtherFi have held mostly steady, but they've still lost market share. And then EtherFi, Val says that he expects them to lose their grip and fall into the abyss at some point, because you can only stretch points so far. So like I was showing you just a minute ago, they are really taking that points and kind of juicing their numbers. They've done a really good job at holding on to their TVL for as long as they can. We've seen recently, with Puffer and Swell, and those guys have massively lost their TVL after they've unlocked their tokens. So if those EtherFi ETH leave their ecosystem, then it's going to be really interesting to see where that ends up. Hopefully some of it comes to our ETH, but I guess time will tell what will happen with that. Okay, there was this interesting conversation that took place on Twitter earlier yesterday, and I kind of wanted to bring it to your attention just to get an idea of how people are talking about Rocket Pool. So this is Ryan Berkman's talking about attending talks at Devcon about ETH issuance. He says, I'd like to see an issuance proposal that further reduces inflation, so better for everyone, and makes ETH more ultrasound, but also maintains incentives stake at home, and is credibly the last monetary policy change ever for ETH. So Dankrad obviously asked the question, how can you incentivize staking from home? Because if you stake from home, then it's really easy, it's trivial for large operators to make it look like they're home stakers in some ways. So here Ryan says, make sure the juice is worth the squeeze, even with much lower yield. So he says it's very low discorrelated slashing penalties, minimize the fear of worst case. So this is actually happening with MaxEB, where the slashing penalties are going down a lot, I think 100x pretty much. Supposedly, I haven't caught up on the latest version of that, but I think what happens then is with correlated slashing, the threshold to start losing more ETH happens a lot sooner than it currently does. And I think that's going to be really interesting. See, the way that works, let me just explain it really quickly, is right. If you're a home staker and you get slashed, you are not related to any other stakers in the world, unless there's some problem with the client. But then the problems are way bigger than just you. But if you do something like if you double sign or if you put your keys in two machines, you'll get slashed, and with that slashing, you would lose ETH. But that wouldn't be correlated to other people in the network getting slashed. However, now let's think of a Lido node operator, right? Like, so we have crypto manufacturer. Like, they're a Lido node operator. They've got, I think, 10,000 validators or something like that they run for Lido. Now, if they were to get slashed, even if they were trying to hide their setup to make it look like 1,000 home stakers that had 10 validators each, what would happen is, because they were all on the same infrastructure, if there was a slashing to happen, then those 10,000 validators could get slashed. Even if it was smaller, even if it's like 1,000 validators, as more and more people get slashed in the same block or within that same period, then the correlated penalties would like massively like multiply. So instead of getting slashed a very small amount, they quickly start getting slashed bigger amounts. So that is actually like really would help home stakers, because if I've just got one validator that I'm running, if I get slashed, my penalty would be really low, so I don't have to worry too much about the fear of staking. Whereas if you are a big centralized service, you would actually be it'd be a lot more scary for you to get slashed. So there's that. The next one is continue to reduce home staking hardware and bandwidth costs. So that's actually going to be a really contentious issue with some of the discussions that are happening in the wider community about making hardware a higher spec, making it more up to date with what the people are using, but also with bandwidth costs, people are saying that we should be asking node operators to maintain a minimum bandwidth amount that's a lot higher than the current minimum bandwidth amount. So that would be a contentious issue. And it says great home staking electricity options. So we have things like, he says, like we have Rocket Pool that no longer requires RPL. So I really like this, Ryan's points here about trying to incentivize home stake and kind of keeping them online while also reducing rates for everyone else potentially and getting them off. This is a very, very, very difficult issue to talk about, which is why I think Dankrat actually asked, how do you incentivize staking from home? But the fact is that this is something that, could help Rocket Pool, but I don't know how it would work. Okay, let's finish the episode by talking about the ETFs. So there is some really interesting stuff happening with the ETFs. And here, yesterday, we got some news of BlackRock. And here in its 13F filing today, BlackRock disclosed ownership of Bitcoin shares. That is 2,535,000 shares of IBIT. So that's $91 million worth of Bitcoin, basically, that BlackRock owns. But in their filings here, Matthew Siegel, who works with VanEck, actually found some interesting information. He says not only that, but it appears that BlackRock Advisors bought its own Ethereum ETF in one of the mutual funds. He says that's a first, right? So here you can see that there's form paperwork filing, and they actually hold iShares Ethereum shares as well. I'm not sure what the details of it are because we don't have that information at this moment in time, but it's very, very interesting that BlackRock are buying up their own supply, basically. So here, Jasper put out a tweet about it. He says, so to recap, BlackRock is selling ETH to its customers, also buying ETH for itself, and also tokenizing treasuries on Ethereum. And you're bearish on. I think this was actually a really great post because it just highlights that while retail, crypto Twitter is kind of losing their shit basically over the price action and really disappointed and like really worried about what's happening, the reality is that these TradFi big guys are loading up the truck basically and going in on ETH, and not only just that they're buying ETH, but they're working on ETH as well, which is like, what? That's just incredible. But these are the kind of things that like really blows my mind, and it just makes me think like, what are you guys talking about? How do you not see this? On top of that, wait, let me see. Oh wait, that's the wrong tweet. Here, this one. So Matthew, then he says, TradFi trusts ETH. He says, I don't make the rules. And this is in relation to Franklin Templeton expanding their $410 million money market fund to the Ethereum blockchain. So, more and more of these TradFi guys are finding Ethereum and they want to work on Ethereum and they want to bring Ethereum to their customers. Now, that when you juxtapose that versus, some meme coin trading or whatever, I think, having TradFi pick your chain is definitely something that will give you longer lasting potential like stability. Now, this isn't me saying, hey, I want like all of TradFi to come onto Ethereum. We have to remember that Ethereum is permissionless, right? Like there's no one that can stop, these guys from making these funds on Ethereum. There's no one that can stop them buying ETH, the token, especially now in the government in the US. That's not going to happen. But what I'm trying to say is that, we can't stop them even if we wanted to, and that of course is a huge selling point of Ethereum itself. We wanted to be credibly neutral, we wanted to be permissionless, we wanted to be open source, open access. So all of those things I think are the reasons why these big guys are choosing Ethereum. They don't care about those transaction fees. Like they're dealing in the matters of millions and billions of dollars. They don't mind paying $100 for a transaction, and even if it adds up, like their margins are such that they can eat that cost. But what they want is they want the liquidity, they want the stability, they want the markets that they can get access to, and all of that is on Ethereum. So this is really, really cool. Now, going back and talking about the ETFs, the Bitcoin one here, IBIT actually recorded $5 billion in volume. This was from yesterday, and this is the highest single day volume for the ETF. And over the past week, the ETF has done $16.62 billion in trading volume, which is absolutely an astronomical amount. Now, the ETH ETFs are not ones to be left behind, and we actually got some really great numbers from the ETH ETFs as well. So if we have a look, from November 6th onwards, ETH has had flows, positive flows of $52 million, $79 million, $85 million, $295 million, $135 million, and yesterday was $146 million. This, of course, now puts ETH at $241 million in the black. So, the flows have the inflows have outpaced the outflows from Grayscale. They've had total outflows of 3,180 million. And BlackRock right now have 1.7 billion inflows. Fidelity have 775 million inflows. Bitwise have 375 million inflows. And then the rest of them kind of bring up the rest. With Grayscale, of course, their mini trust having $380 million of inflows. So this has been this is the beginning, I think, of a really nice period of adoption going on over here with the ETFs. And this is just one way of ETH being vacuumed up. We also know there's another way of ETH being vacuumed up, and this is still continuing, and that is with ultrasound money. The burn is taking place. And if we have a look at the weekly chart now, we see that ETH is almost deflationary on the week. It is just 460 ETH away from being deflationary in the week, which is absolutely fantastic, because for a while there, people thought that no one wants to use ETH anymore and ETH is dead. But ETH is actually accruing fees again. In fact, it's burning, it's burned 18,000 ETH in the last week. If we look at the day, just in the last day, it's burned over 1,100 ETH. So this money, of course, all adds up as well. And as we go on, with the ETFs vacuuming up ETH, and also, hopefully there being a burn that continues, I think we're going to really start seeing the impact of it be felt on ETH, the token. And of course, that's going to be really exciting for everyone. So on that note, hopefully I've been able to give you guys a bit of hope instead of just the doomerism kind of around the price right now. And, I think just hold tight and, you made your bets with conviction. Now it's time to ride it out. And, I hope it doesn't go to zero. That's not financial advice. Of course, your situation differs from mine, but I'm going to ride it out and see where things take me. But thanks all for watching, listening, and being part of the Rocket Fuel community. I'm going to hit 500 episodes really soon, so that's really exciting. And I'll see you all tomorrow. Bye.